Welcome, traders. In this video, we're going to go over some new information about how to use the KP2 ratio, and we're also going to take a look at a couple of new indicators that I've gone and created for these ratios themselves. So what we have down here is we have the KP2, and we're basically getting that information bar by bar now. And to me, what I've seen is I've seen some very interesting information. Now, what I've gone and done is I've gone and put some horizontal lines on the chart so that I can give some kind of weight to each of these moves. So the black line here represents the 0 line, and the first green is 750, the second green 1500, and the third green 2250, and then the same for down here. Now this indicator down here, what I'm doing is I'm tracking the KP2 ratio. So again, the black line is representing the 0 line, and the green is representing a positive 95, and the red is representing a negative 95. Now, what you need to know about these is, as we see right here, we see this jump from negative 3,000 to a positive 1,000. And what's happening there is this is where we are creating a new zigzag and a new zone. So that jump is what's expected when we see that. So on this chart, we have our zigzag set to 8 ticks. So once we have come off the bottom here 8 ticks, right here, that's where we see the jump, exactly right here. And then on the way down, same spot right here, this is where we create the new zone, and we see the drop from here down to here. So this selling right here, that is the KP2 selling that came in as the market traded to the apex and then traded down, but before we had a new zone. Now the other thing that is really interesting about this is what I've basically been studying during this time of some extreme market volatility is I've been studying the KP2 ratios. And I've always said that these ratios are pretty much the most important thing that we can look at and we can understand. Now, what I found that is really important is that if we look at the ratio here, we have a 54. And this right here is an exhaustion trading pattern. So we see with the exhaustion trading pattern, we had an excellent trade that was worth about 8 points. And it is very common that what we see as we come up and test this high is we look back and we also see that this is a very high number right here, over my threshold of 95. It's not too common to see the same threshold in the next leg up or the next test right here. We usually see a number that is pretty much typical of what we see right here. Now, what we're looking for is we want to see a good number right here, and then when we come down to here, we want to see a doubling of that number or somewhere close to it. So here we've gone from 54 to a 93, and that creates a strong trend trade here. But what is really important is the doubling of that number. And we see we get a 4-point trade out of that. We go from 93, and here we have a distribution pattern to 171. And we ended up with a 5.5 point trade out of that. Again, our number was already high at 171, and we increased it to a 201 here, and that got us another 5.5 point trade. Now, here's the interesting part. When we compare the 201 here to the 134 here, well, what's happening? They're not coming in with as many contracts on limit orders as they were back here. Back here, each time the market traded higher, they were increasing their contracts on limit orders. Here, they are not. So let's just do a quick review for some people that may not understand what these numbers are. The KP2 number is the filtered delta from the low to the high here, or the high to the low. The KP3 number is the filtered delta number from a low to a low, or a high to a high. And then this KP2 ratio here is simply the number of contracts, and you can see the math going on right here, 2,283 divided by 17 ticks, and that gives us a 134 ratio. So what we see right here is we see that we've gone from 201 to 134. What's happening? There are less people willing to come in on limit orders down here. And right here, these numbers have basically stayed the same each time they've come down. They're in the 90s. And that's a good sign, because what is occurring down here is that's a good sign that people are wanting to absorb the contracts on limit orders to be buyers. And it's kind of a warning sign to you that you should be aware of what is going on. So we have our clues here in that we have green classifications both here, and we have a lessening of the KP2 ratio. And what's going to happen out of that? We're going to enter an extremely strong uptrend for over 10 points, because a lot of contracts here were sold short, and all you have to do is look at where the price needs to break in order for those contracts to be underwater. And we see right there where a lot of contracts had traded at, we see a very strong fight. But look at what's happening down here with the KP2. It's high and getting higher. So that would be another clue for you. And then, of course, we end up with our 10-point move up to here. The other thing I want to mention is that I'm obviously using historical data from on or before February 21st, because the information on the current charts is basically irrelevant because of the illiquidity. I've had several people call me and ask me how the system is working or what I would be doing with the current market, and I tell them the same thing. There are no advantages to trading this illiquidity, and with these huge ranges and this huge volatility, we give up our advantages that we get when we have these numbers here. And just to illustrate what I mean by this, here we have a chart from Friday, and in a 3-minute period towards the close, we can see that we're up almost 30 points right here. And the information that's down here on the KP2 and the ratio, it really isn't helping us any. So I'm not worried that I'm not trading, and I am focusing on studying. So here's a pretty interesting example that I want to take a look at. First, we have over here, we have a strong trend reversal, And we can see that we had a KP2 ratio here of 198. That trades into an exhaustion trade, and basically what that's going to lead to is a quadruple top here and then a significant sell-off. So we can see, as in the previous example, we don't need to have a same or similar number here at the exhaustion pattern to get a good sell-off. And we did. We got a 5-point sell-off. Now, here, again, look at, we have two accumulation signals right here, but look at what's happening each time on these accumulation signals. This 225 is pretty much expected after a market's been in a strong move upward. People are still trying to buy and take the market higher. Okay, that's good. Now, what we see here, though, is on this accumulation, while still a good number, it is now less. And this is what becomes really interesting, is as the price traded higher, we've gone from a 55 number, which is basically in the middle and is not telling me anything, to special divergence and a negative 37. And as we look down here, what these ratios mean is that if we have a ratio on this up move at or around 0, well, that is what special divergence is. And this one is in fact a negative 37. So we've gone from people putting out a normal amount of limit orders here to people that were actively selling on market orders here. And then we've obviously more than doubled the ratio, going from a negative 37 up to a 163 right here. So again, there were a lot of clues on this chart that we were going to see this sell-off. And as you can see, that sell-off was a pretty major sell-off of at least 30 points. Now, here's something interesting that I've also found about this new indicator. What we want to see is we want to see these V's right here, where we come up and then we make a sharp downturn. And that's happening in both indicators. That's really interesting because those are what we are looking for to make this great entry point. And the reason that I put these lines on here are so that we can see the relative strength of a move. So as we can see, each time the market traded off from the high back here, each time the buyers could only take it up to around the 750, 800 level. And the sellers were taking it down to the 2000 to the 1500 level, and then obviously significantly lower than all of that right here. But what happens here on the reversal? Well, the opposite happens on the reversal. As we traded back down, we basically only made it to the black line down here, and then price traded up, and we had some short covering, which was at least looks like about 10 points. We can also see that each time we come up, we are coming up with a higher KP2 until what happens? Well, until we get to here, test of this high. Again, we have a top there, we have another top there, but what's happening here? Well, we can look down here and we can see that when we are testing this high, we are getting nowhere near the 1500. So what is that saying? Well, that's saying that we have some weakness there. And then we get back up that entire 10 points that we just popped. What's also very interesting about this indicator is the way it calls a top or a bottom. And I'm just going to use this as an example right here. Here we are in a strong trend, and this is not going to be something that we're going to want to short right here. We may want to do that right here. That's fine. But as I've keep repeating, in a strong trend, I don't know that it's going to end right here. I don't know that it's going to end right here. But we are getting clues down here with the KP2 and the KP2 ratio. Now, what's really interesting is when a market does start to top, basically what we're going to be looking for is we're going to be looking for this to gradually be declining right here, just like it is on the ratio right here. When these are working together, then that's when we see this top going on right here. When one is going higher, so when the KP2 is going higher into here, well, what is happening is they're still letting off the same amount in limit orders. That's what this is telling us. But with the KP2 rising from all the way back here and continuing to rise until this point right here, that is the divergence that is telling you you don't want to get short anywhere in here. Right here, here's another great example of using the indicator down here. Look at what the ratio was telling us as we hit our no demand and distribution right here. The ratio and the KP2 from the apex just started to fall off. And you can see how that ended up in another very good trade for at least 6 points. So I'm really liking this indicator because, again, we can just see a lot of things that before we weren't able to see. And again, you know, here we see that we have a strong trend reversal. Again, this is not something we're going to short, but the reason I point this out is I want to understand what a top looks like with my indicators. So with my indicators, all the way from back here, the KP2 is going straight across, and from right here at the top, they have stopped buying. The delta has stopped going higher, and now this is going straight across until we have the zigzag right here. So it is a very interesting indicator, and I can only hope that the volatility goes away pretty soon so that we can start using this. I don't know when there's going to be the update for this because there had been a change in the NinjaTrader architecture starting with version 20 or 21. And what that did is that changed something in the DirectX programming. And you may start to see that you'll have errors in your log regarding the DirectX. So my programmer today gave me an update that should fix those DirectX problems. So what I'm going to do is I'm going to roll out everything together, both the update for the order flow and the update for the ZoneTraderPro price patterns. That's all going to get rolled out together. There's one other update about Bloodhound and the divergence patterns, and that is that I've been in discussions over the past 2 to 3 weeks with both the programmer and the lead programmer at Bloodhound. And basically, it's kind of a difficult to understand problem, but the simplest way to understand it is in order for me to be able to create these divergence signals, my programmer needs to tell Ninja that it's creating a bar and to pull those numbers from the bar. Now the problem occurs is that when he does that, he has to use a certain function. And when that function is used inside of what is called a class, Bloodhound is basically not understanding it. So while I had some hope that we would be able to get the divergence indicators working for Bloodhound, at this point I am less confident that that's going to be happening. However, of course, the price patterns and the order flows, they still, of course, are going to continue to work with Bloodhound. It's just the divergence patterns that are going to give us a problem. I do have an idea for a workaround. I want to be absolutely certain that we can't make the programming work as it is before trying a very much more unattractive way to get this out, to get this information out of Ninja and then back on the chart in Bloodhound. So that's a little bit of an update. As I said, I'm not sure when I'm going to be rolling this out. I do want to test the new ZoneTraderPro price patterns script before distributing it. So probably look for an announcement both on the blog and on YouTube in the next week. Thanks for watching and have a good day.